to look at what we are going to trade, okay, except you want me to just do something random. So we want to understand what we need. Remember what we are doing, guys. As traders, the difference between a trader, a regular trader who wants to make money long, and somebody who is a random amateur or a gambler, you are looking for money over time. Now, if you open any chart, okay, what you see on the chart is usually candles, but you can represent these candles with lines, right? If I have a chart, if I have the market like this, okay, I can, of course, this is time, and then this is the price, right? I can decide to use a simple line graph to represent those two things.
Listen, I need a contact to that Katsina guy. Minister Foundation. Say yeah, for the key.
Okay, so I can have I can decide to, you know, the price can be represented by a simple line. Okay, because this means that by this time, okay, this was the price. By this time, this was the price. You understand what I'm saying, Abi? By this time, this was the price. Okay, now, when you do it like this, there are several things that the chart represent. That's why we can't use, or we usually don't use a simple line. Okay, every chart is supposed to give you, now, if the market opens in the morning, let's say it's Coca-Cola you want to trade. You know, Coca-Cola doesn't change fast, but let's assume it changes fast. All right. If Coca-Cola opens in the morning, the price might be 90 naira. Early in the morning. When the market opens, it has a price. Okay, it has a price. That's the price where it opens. All right, now, as time goes on, okay, people will start to, let's say, price, and then say, okay, why don't we, some people, even if you're selling that Coke at 90 naira, some people will come and say, okay, I want to buy 500 pieces, give me for 80 naira. Am I right? So it's possible. And then the price can go down. The price can fall down to 80. Let's say this is 90 naira. Okay. And then the price can come down to 80 naira. Okay. Then later, within that same day, the people who bought these things will now go back to their community and start to sell. They can now start selling at 100 naira. Am I right? Can start selling that Coke at 100 naira. Now, it is possible for you to maybe go to a place and invest
600,000 and you transfer the whole money without taking
as much as in the course of the day, the price can appreciate.
Balance here, transfer is 800,100. Look at that trust.
Right. Now, before the end of the day, some people still have Coke that they have not sold. Okay? They are looking for anybody to carry. Those people can now sell at 120. Am I right? Yes, they can sell at 120. And something I want you to understand what I'm doing here. Now, this is what happens in the market. That's why we cannot represent. We have to show traders all these prices. How high the market went throughout that day. How low it went throughout that day. what it started with, and then what it ended with. This is the information that traders will now use to make their trading judgment the following day. If I come the following day and the last person stops selling at 120, that's where the market will open at. Then maybe people will bid the market low to 100. It might not go back to 80 again. And then when you open your chart, I don't know if you understand what I'm trying to say now. So now we cannot represent these four information with a single dot or on a chart. So that's why we use candles. That's why we use candles. All right. On a candle, there are four informations. It tells you how high, how low the market went. It is a red candle. Okay. Can have a red candle and you can have a green candle. The information is just reversed. Green candle means that the market appreciated. Red candle means that the market depreciated. In this example, the market appreciated, so it's going to be a green candle. All right. Now, the market opened at 90. So it means that here we have 90. Okay, 90 naira. Then some people said, no, they want 80 naira. They are buying so much. So they want to take it at 80 naira. Those are the people that we call big banks in the market. They are the big banks. They have enough money to push the price to a certain level. Okay, 80 naira. And then later on, the market went to a certain point. Because of the day, the market got to 150. It got to 150. And then later on, it came back to 120. This is the price of Coke as at, let's say, yesterday, right? This was what happened to Coca-Cola yesterday. Can buy Coca-Cola 120 sometimes, can buy 100 sometimes, can buy 150 sometimes. I'm right. And then some people buy from breweries directly 80 naira. So this whole information is usually represented on your chart. If you look at your MT4 now, if you zoom in, you will find that all the charts have many candles like this. Now, when you now narrow in, you understand the concept of this candle, right? Okay, you're saying that price went up. We can't just say, okay, price opened, went down, went up, and then like this is another way of representing. If you see those ones they call bar. There's the bar chart. Yeah, there's bar chart. There's bar chart, there's line chart, or candle chart. Those are the three you have. You can have bar, you can have candle, and then you can have simple line chart. So this is the bar. It still gives you the same information. It will tell you where the market opened from, how low it went, and then how high it went, and then where it eventually stopped. So when you see those things, they are just like this. They're just like this with a line here and another line here. Okay, so that's the way they represent every chart. Now, when you now combine each of these candles, let's say I have the candle for this particular day here. I have the next one here. Mind you, the price might open at 90 and never go below 90. It's possible. So I'm going to my green candle will now look like this, right? It's possible. And then people call all these things different names. It's rubbish. There are people that even place their trades based on this. I'm going to teach you the concept behind candles. You don't need to cram the shape of a candle to make trades. Even if you're going to do something like that, I will tell you why you're working with the price. You're not working with the shape of the candle. So I'll show you. Now, when you consider this, you now know that if I want to have a simple chart, you know, of course, if it's going up, I should be seeing green candles. Okay, so you're going to have collection of, you know, green candles going up. Okay, green candles going up. When you zoom in, this is what you see. Okay, market going up. It's possible for you to have few red candles. Of course, you can have few red candles, and then it continues. to go up again. Okay, so you see red, green, red, green. Okay, by default it's white and black. Okay, but you can change it to red and green. Okay, so this is a simple candle chart. Now, the next thing I want you to understand, is there any question on this? Any question on this? No question so far. Okay, now the next thing I want something, we need this information anymore. Okay, by the way, the candlesticks, when you start to do your research, you now start seeing something like Japan method of representing the price charts, because this thing I just explained to you about Cook is what happens. So traders need the information, they want to know, and then they plot this thing by hand. Before it became electronic for us like this, people will go to the newspaper and take the prices for that rice or whatever. They were farmers, as futures. They call them speculators. They take the prices from the newspaper. They take the prices for the past 1 month, and then they plot it on a graph by hand. Okay, so we are getting, there are a lot of things we are enjoying today that we don't even value. So imagine if you want to make a trading decision with a price chart, you have to go back and take all the prices for every day for the past 1 month or 1 year to be able to make this decision. Okay, so you don't need to do that. Everything is in that MT4. All right. Now, the next thing I need you to understand again, okay, is that I talked about 1 whole day, right, for this thing to happen, is it not? Now, I can also talk about 1 hour for this whole thing to happen. If you're not looking at, this is Coca-Cola. Might not be very easy for me to describe this with Coca-Cola. But if you're now talking about currencies, do you see the way that thing changes? See the way it changes very fast. In split seconds, all these prices can happen. And then you need to represent them for somebody who is trading. Come within an hour, the price of Euro USD can experience all these changes and close. Once it's 11:59, once it becomes 12 o'clock, the next candle starts. It will open from now, mind you, just for the sake of those of you taking note, this side now will be the open. Okay, so this place is going to be called the open. And this place is going to be closed. Does it make sense? It has to open from the close. I said there is a gap in the market, which happens when the market is extremely volatile. So the platform might not be able to register any price at 120. The next bar can open maybe somewhere around here. So it doesn't register it. So when you now open your chart, you start to see some gaps. Okay, so from this candle to the next candle, there's a gap. All right, so just take note of this. Now, what I'm trying to say is this whole candle can be 1 day. Okay, and then I can have this same information in 1 hour. I can have this same information in 1 second. I can have this whole information in 5 minutes. So these are the different time frames that you have. Okay, there are many time frames. Okay, it just depends on what you are looking at and how many time frames you want to analyze. Okay, but what you need to understand is that each of the candles, if you select a H4 is 4 hours per candle. If you select a H4 candle, that H4 candle means that every 4 hours, one of these candles will print. You have 6 of them in a day. Okay, so it depends on the weather and then climatic condition and all those things. So the broker changes the time. But if it's starting from 10 to 2, you have the first H4 candle. 2 to 6 in the morning, you have the next H4 candle. From that period when London opens, you have the next H4 candle. That's from that 6, 7 all the way to 12. You have the next H4 candle. Like that. So take note of that. Okay, so that you don't have any confusion when you start looking at the chart. Okay, so I believe this information is clear, right? So if you open any chart, you have charts with you. So if you open your chart and then switch your time frame, just know that you are now working with each candle to form within that time. Okay, if you use 5 minutes, if you watch it for 5 minutes, you see that the candle that is moving will close in 5 minutes, and then the next one will start. You can check that in 1 minute. It's something that you can observe now. Okay, so open your chart, switch to 1 minute. You see that from now to the next 1 minute, a new candle will form. All right, so I want you to drive that thing home so that the other things I'm showing you will make sense. So what I'm trying to say is the market is so large that this price, the activities that are taking place in the market can happen even within 1 minute, and then you can see what is happening. Now, but what I want you to still understand is that the purpose of giving you all this information is I like to make sure that you know the foundations, you know what is happening from the back. Okay, so that I don't just open the chart and then say, yeah, this is happening, this is what you don't even know what is happening on each time frame. Okay, so when you start to analyze the chart based on time frame, there's something we call multiple time frame analysis. You can now understand what is possible, what is feasible. Okay, all right. Now, in technical analysis, anything that happens in the world reflects on the chart. If Donald Trump makes any statement, I don't care. I will simply open my chart and look at what the market is doing. Okay, so I'm saying this now because one of the principles of TA means technical analysis, is that every information is reflected on the chart. Okay, history repeats itself. If the market behaves like this, and when it behaves that way, it will go up. We notice it happening and happening over and over. It will repeat itself because these prices, they have memory, and the people trading it are human beings. If I know that whenever price gets to, whenever the market gets to 150 for Coke, it will reverse down. Almost everybody knows. So anytime it comes to 150, it will go down. Is it not? Yes. So it's a simple thing. That's what happens on the price chart. So we know that if there's a resistance, anytime market goes to that place, there's a high tendency of the market coming down. Are there times when it can break it? Yes. Something can happen. Coca-Cola becomes scarce and expensive. It's possible. Okay, don't just key into this Coca-Cola thing. I'm talking about the market now. I'm just using Coca-Cola as an example. Okay, so something can happen. Maybe the company maybe is vandalized, and then there's scarcity of Coke. The people who have Coke will begin to sell their own 180, 160. So you can appreciate it's possible. You have not bought Coke for 250 before? You have not walked into a restaurant to buy Coke. You don't buy it for 150. You buy it for 250. Is it not? You buy it for 500. You buy it for 500. Right? So that's what happens in the market. Okay, those prices, they change, they move. Right? Okay, now, having known that about the charts, all right, the next thing I want you to understand is that we all are now going to define our edge. I'm going to tell you what drives an edge. And then I have explained to you before now that what we are doing is a very simple thing. At the level of one trade, I cannot boast. At the level of one trade, nobody can boast. But at the level of 25 trades, 20 trades, 100 trades, 50 trades, a professional trader will tell you, this is what I can do. That's what I want you to understand. Because if we define our edge here now, our edge can be, yesterday I was telling you about flipping a coin, is it not? If you flip a coin and you add more weight on one side, now what it means is that it's supposed to be 50-50. Most of you did probability in school. 50-50. You flip a coin, right? Now, if I add weight on one side, this thing will change to, let's say, 64. Now, let's assume that we represent all these things on this chart now. Now, I have head and tail. Okay, I have head and then this is you picking a trade. This is you picking a trade. Now, I want you to understand what I'm doing now. It's very important. Now, when you are picking a trade, you are saying that head will appear 60% of the time. Right? You're saying you are saying that head is going to, and then tail will come off 40% of the time. Now, this is the best strategy can be. Don't let anybody, don't let it. No, if the chart presents itself in such a way that it is going to be, let's say, 80-20, nobody is going to take the 20%. Nobody is going to take. At every point in time, the market presents itself in such. At every point in time, if you look at any chart, it will give you a reason to buy and a reason to sell. Now, that's why I say that the market is designed to create confusion. So now, you can never have anything that comes close to anything. You can't have anything more than 60%. I'm telling you now, I mean, sometimes it looks like you have almost 100% when you start to trade. Now, when this thing happens, you know, or your winning streak. But ultimately, the market will not allow you to take anything more than 60%. Okay, I have my reasons for telling you this, because somebody is going to tell you tomorrow in the course of this journey that he has a system that gives you 80%. Let him use it. Because and when he does this, he will tell you to bring in all your money, and then he will tell you that this thing can multiply your account size in 1 month. It's a lie. The market doesn't present itself more than 60-40. I don't know who designed the market, but that's the greatest puzzle of all time. When you look into the market, you begin to see what I'm talking about. If you're not careful, you will lose. Don't come into the market thinking that you want to be right. The market will only give you a maximum of 60% chance of winning. And then we can make a heap of money from this. Stop looking for perfection. We can make a lot of money with 51% win rate. Just have at least 1% in your favor. Okay, so if you have as much as 60%, if you have as much as 60%, they will worship you. Okay, now when we have this, now this is why I'm telling you to use 2% per trade maximum. Because if you come to the market and you know that you can only win 60% of the time, and then you have a distribution of trades,
you're waiting to see your setup, okay, which is your edge. Now you know that over time, mind you, whenever you lose, let's assume that okay, we're taking 2%. We have $100,000 in our account. Let's do something that is easy for us. Okay, you have 10,000 naira. 10,000 naira. You put in your account now, and then you want to be risking 200 naira on each trade. You risk 200 naira on every trade, which is 2%, is it not? Yes. Okay, now let's say now you now put you see your setup. Maybe I teach you maybe a simple MTR. That's major trend reversal. Major trend reversal, and the candle has printed already. Basic trade. When you place that trade, you tell your calculator you want to reach 200 naira. The calculator will now give you the volume to use, the lot size to use. Now, when you use that lot size, what you now do is you put in 200 naira here, and of course you wait. Is it not? You wait for it to play out. Now, in MTRs have low probability because you are saying that the trend is going down, but you want it to reverse. The chances of the market has inertia, so it will keep doing what it has been doing. A lot of traders always feel that it has overdone it, and it should go back. Right? And then they counter it, and then they lose. They counter it, they lose. So if we are going to bet that, let's say I want to bet with you, and then I'm expecting you to do something crazy. I'm going to stake more. I mean, I'm going to offer you more. Is it not? Is it not? Yes. If you want to do a normal bet, maybe I tell you jump from the roof of this place. Jump down.
Okay.
Right? I'll pay you more. Now, if I say, okay, go to the top of the place and jump from there, I will increase it. Because I'm asking for more. Now, if the market is going to reverse, you should not take anything less than at least twice the money you are looking for. You understand what I'm saying? If you're going to tell the market, okay, I'm putting in $200, you should not accept anything less than 2 times. When these major reversals take place, they can give you as much as 10 times of your risk. So you're going to be right only 40% of the time. Is it okay to take a 40% trade? Yes. Why? Because you are receiving 2 times the money. You will cover up. Do you understand the math there? You don't understand. If it's a 50-50. You lose, is it not? 20% more, 20 more, is it not? So what we're saying is that there are 2 things we consider. There's something called the win rate, which is what we have here. And then there's something called the risk to reward ratio. Those are the 2 things you have to take. What I'm giving you so far is the win rate. This is the amount of the percentage at which you win. If you operate with a 50-50 win rate, you must make sure your reward to risk ratio is at least 1.2. With this, you are going to make money. You generate money by the end of the month. There is more than 60. Because if you have as much as 60 and you have a win rate of 1:2, because you keep making money month after month. This used to make money every month. Okay, so now coming back here, I want to place, let's say, 25 trades. in the course of the month, okay, I'm using maybe 1 hour time frame or 15 minutes time frame. I'm looking for my setup. Okay, when I say setup, I'm looking for the rules that I have laid down for my entry, for my exit. These are some of the things I will give you on the slide. Okay, so I'll just present everything to you tomorrow. So, but the market will be open tomorrow. Normally, our seminar is supposed to be Monday, Tuesday, and Wednesday, so that the market will be open for us. Okay, but tomorrow the market will be closed. Okay, so that's why I'm doing this today. All right, but it's not changing anything, it's not affecting anything. You will still get everything. I'm still trying to make sure you get everything well. Okay, now when I start flipping this coin, it's possible that my first trade worked out, right? It's also possible that my next trade worked out. Now, mind you, anytime I flip this coin, if I make money, I make how much? 400 naira. If I now go back to my brokerage account, what will be sitting there is 10,400 naira after my first trade. So I will repeat this again. Now, on if you do probability, you know what I'm talking about. On every coin, is independent, and then it has no business with the previous trade. If I come here now, my 60-40 is going to play out on this particular trade. It has no business with what happened before. If I toss a coin now, the coin will not tell you because I tossed it before, it was tail. Now it wants to become head. Now, what I'm showing you here is that what we do in this market is probability based. That is what professionals do. That's what the banks. You don't need it to make money. All you need to do to make money is to make sure you are putting 200 on each of them. Even if I have tail, right? I know that before I finish trading 20, 100, a head will surely come out. Because that made it to become 60%. So can this thing happen? Yes. It's called cluster. In life, there is something we call cluster. Cluster of bad luck. If you have gotten to 30, you must have experienced cluster of good luck and cluster of bad luck. There are times in your life when everything works out well. Everything works out well. And there are times when you think you want to die. It's natural. Clusters happen everywhere. Now, these things happen. If I'm going to have a cluster of tail, I should have a cluster of head, is it not? Yes. And then what happens? If I have a cluster of head, I'm also going to be making, I'm losing how much here? 200. But I'm making how much here? 400, guys. Now, by the end of the month, there's no way this thing will be less than 10,000. I'm going to have something on it by the end of the month. So that's how professional traders think, and that's how they make money. That's why I tell you that don't come to this market thinking that you want to double money. See, can I put all my 10,000 naira on one trade? Can I do that? Yes, I can. What if it now comes out head? I double it, Abi? I double it. Because if I put, instead of 200, I put 10,000. If it goes in my favor, my money becomes how much? 2,000, 20,000. That's what a lot of traders do. And then when they do this thing, they have clusters, they think that it doesn't work. It works. It works. If you're not ready to accept this, there's no point continuing. I've been in the market for a long time, and this is the only thing that works. Your ability to accept this thing is now what makes you a professional trader. There is no course you need to take again anywhere. If you are going to learn anything again, just learn how to add weight to your coin. Is it not? That's the only thing that is left for you to learn. What are the different ways to add weight to your coin? And then when you add these weights to your coin, don't just go and implement it with your money. Go back and test it on demo or on a maybe sent account. When you are sure that this is how it operates, this is what it generates, then you now come and put it in real money. So because you will keep learning, and there is a problem when you start to learn. I've told you that problem. When you start to learn, you now have something to protect. The more you learn, the more you think that, oh no, you are not, I'm not sure. I think I'm better than 60%. I'm now maybe 65. And then you now think that you can have more heads. So what? You now increase it to 500 and increase it to 1,000 per trade. And then when you have your cluster of bad luck, what happens? You have lost about half of your account size. So this is very important. The next thing I'm going to show you is simple ways to take trades. Okay, and then we'll take some trades now. Okay, so I believe you understand what I did here, right? You understand what I did here. So if you're having like a 50-50 system, okay, if you're having a 50-50 system, you win 50% of the time, and then you have 10,000 naira. You risk, you take 100 trades. 50 works for you, 50 doesn't work for you. Now what happens is the 50 that work for you will generate 10,000, is it not? If you reach 200 naira on 50 trades, you have lost how much here? 10,000, is it not? So what it means is that you have lost how much? 10,000 naira. Okay, after 100 trades. You have doubled this account. Is it not? You have doubled the account. This is feasible. It's very feasible. The only thing is that you might not be able to take 100 trades in a month, Abi. But with time you will grow that account. So you might not be able to take 100 in a month, but by the time you allow your win rate to play out. So if you have clusters of bad luck, it doesn't change anything. As long as, see, if I put 200 on a trade, I don't feel it. That's what I was talking about when I say professionals don't care about what's going on. Once they open their and then they see their setup, they put the 2% or whatever percentage they decide to take, and then they go their way. But if on this trade you put 5,000 naira, you will be walking on the road and looking at your face. That's the only downside. So you just look at it and then you know, okay, what will work for you. What I'm giving you now, we're going to use, you can use a 5-minute chart on it. If you have more time, you can come down and use a 5-minute chart. And then you monitor it. You wait for it. But you can't do that now because and then before you know it, you run and just buy immediately without calculating your risk. And now you're not doing the right thing anymore. And then now see how to take it in trade. The market always moves in trends. Market moves in trends. Okay, there are times when it stalls. If not, this whole thing is a caricature. It doesn't move up or move down. You cannot make money. So on any chart, you see it rising or falling. You will surely see that generally is going up or coming down, or maybe that period is just sideways. Okay, so you can have an uptrend. It's called an uptrend. All right. It's called an uptrend. It's called a downtrend. And then we call this a range or a ranging market. Okay, it's called trading range. So here we now say the market is in trading range. This is the place where traders now buy support and sell resistance. Okay, because the market is just going up, down, up, down. So we now say, okay, the market goes up to this point and comes down. It has done that twice. If it comes here, it needs to come down. And then they trade that. Some people will say, okay, the market has been going up and is respecting this line. Okay, it goes up, comes down. If it comes to this line, it goes up, comes down. Now it has come here once and again. So once it comes here, this now becomes a place where thousands of traders are looking at. They want to trade. This is a simple strategy you can use to buy or sell. When you introduce a line to your trade, the market comes back to that line and pokes through. It's called an overshoot. When the market pokes through but fails to go, when I say a poke, you're going to see, I'm going to be showing you a lot of important and interesting things. When a poke is, the market passed that place, but they didn't accept the price. They pushed it back up. So what you now see here is that the candle that formed here has a wick like this. So when this happens, you can buy from this candle, and then you can buy from here, okay, and then you put your stop loss where here, saying that if the market starts to go below this point, I'm not interested, take the 200 naira. Is it not? But if it resumes and it continues to form after this point, if it starts to form candles, when it gets to 2 times the size of this candle, right? 2 times the size of this candle, let's say something like this is 2 times the size of the candle, right? So this is 2, this is 1. So when it gets to this place, give me my 400 naira. Does it make sense? So once you see this, you place a trade here. You factor how many pips you have here into your calculator. The calculator will now tell you the volume to use, so that if this thing goes against you, you don't lose more than 200 naira. And then you now also measure the number of pips and then set your target. You see a broken line that shows you that this is your target. Once the market gets there, whether you are there or not, it will close 400. Yes. Which of them? The red, right? Yes. I'll be showing you that. Okay, no. That's the spread. No. I'll show you how to introduce these lines now. We're going to do everything now. So I'm just making sure you understand everything before I now begin to show you on the phone. Okay. So now when this is a simple strategy. It's a very simple strategy. Does it work? Yes. This is one of the strategies I'm going to show you. I'll show you 2. One is going to be a trend following strategy. And then the other one is going to be a reversal strategy. Now this one is a simple, saying that the market is moving up. As long as the market is moving up, it will keep moving up. If people if they protected this level, you draw the line again. This line is called technical analysis. Traders put the line and trade with it. We were using fundamental analysis before, but you cannot play straight because you believe that US is having an election and something is going to happen, and maybe somehow US will become better. So you just buy. You can't trade based on, you cannot place any trade based on that. So you need a set of rules, okay, that will now tell you, okay, whenever this thing happens like this, 60% of the time it continues. Once you have something like that, you can place your trades and expect to make money at the end of the month. So what I'm trying to implant in your mind is that it takes time Many of you are seeing these things. Those of you who have been looking at the market, the forex market, you are seeing this thing, but you cannot implement it because you don't have the patience to allow these things to play out over time. You want to make all the money needed. I told you, the best strategy is simple. It is how you execute it that differentiates you from the other guys. If I come here now and I say, oh, the line is good, it has bounced here, it has bounced here. Traders are waiting for the market to touch the price to come back to this line. The moment it comes back here, some of you, it might be coming down and you're already buying. See the problem? It might, once it's approaching, it has not gotten to the line, you're already buying. Right? Some of you, it will come to the line, it wasn't rejected, but you have already bought. And then what happens? It breaks. You just see something like this. Is it possible? Yes. It's possible. So that's saying wait for the setup to print itself correctly. Don't be too fast. So when the setup prints itself correctly, you now know that okay, this is one of your setup. Take it. Okay. Now, this is a simple trend. Every uptrend you look at, if you go back, scroll back, you see the first two bottoms. It doesn't mean that anytime there are two rising two bottoms, no. Two rising bottoms, it signifies an uptrend. We also know that the market has inertia. It will continue doing that thing it's doing. Now there is something bigger that I'm going to show you that will help you to know if those two rising bottoms will actually continue. So I told you we can't learn everything immediately. For now, what I'm giving you is a simple thing that you can implement. Play straight. Okay, and then you will now get feedbacks. All the corrections, we can take them. Okay, so after the workshop today, go back home, look for the setups I'm going to give you, and take all those trades. All right, take them. And then tomorrow, I want to see your results. Okay, let's see how you did. And then we can now cement everything. Okay, then subsequently, what we'll be doing is, now you know how to place a trade, now you know how to calculate your risk. Okay, so what you now need is, you don't need all those things, or at least we're correcting you, those of you who might not get it at once, we're correcting you. And then subsequently, we're now looking for, ways to get into the market, to make more money. Okay, now this is a simple trend following strategy. Now you can have, I told you that there's something called reversal, MTR. That thing is called major trend reversal. A lot of traders like to bet that the market is going to reverse because they always feel that the market has gone too far up and it's time for it to reverse. Okay, if you look at GBP/USD on the daily charts, you see that it's consolidating at a place where it looks like it's going to reverse, and all the trend lines are broken. I'm going to show you. I call it pip crack. The market moves up, right? It's going up. The traders put their lines. Once they see a market that is rising, they put their lines at the base of the market. Now, this is understand what's happening here now. This is like two bad guns chasing each other, right? Two bad guns. Let me put the other line so that you know what I'm talking about here. Okay, on the street, the one bad gun goes and then comes back. There's usually a line, you cannot exceed that line, right? Or a fence. So when this thing is going on, market gets there, reverses, gets there, reverses, gets there. Okay, so they are pushing each other. Now, what happens when these guys come out of this line? These people will run away, Abi, because they have broken into their wall. Okay, so when they run away, these guys might try to push. Right? They might try to push. But these people have now flooded this place. So what happens? The market starts to fall. Right? This is a major trend reversal. You see it in the chart. A lot. Every trend reversal. So if you want to capture a substantial risk to reward, you want to capture a substantial risk to reward, you trade major trend reversals. They are 40%. Don't let anybody deceive you. This one is 60%, but this one is 40%. Yes.
Let's say that trading that strategy, like you always wait for it to come back to the trend line.
To come back to trend line.
That support.
Yes.
That support of what? Would you advise that we trade one number? Resistance.
That's the one sending it back to the. And the thing is, you don't know how far up it will go.
What if that's resistance always happen like?
Yeah, you can. There are lots of ways to trade. You can. It's acceptable that when it goes to this place, you sell and take your profit here. You can do that. You sell here, take your profit here. But I wouldn't do that. You can do both now. You can do both, but nobody can predict correctly all the moves of the market. Just deliver more. Nobody can predict all the moves of the market. So you can never know that this is. I mean, it's as if you are a fortune teller. You're telling us that you know that this thing will come back to this line and go back to this line and come back to this line. It's not very easy to trade. Except your strategy says that you have this. Whenever the market comes to this place, you trade against it. But personally, I don't trade against the strong trend. I don't trade against the strong trend. I fade. This is a weak trend. I look for weakness within this trend, and I take it. Okay. So what we're saying is there is a smaller. The market is coming down here. Okay. Somebody is saying, should we trade it? This is like fighting or joining Arsenal when they are playing against somebody like Chelsea. You know, Chelsea will always win them. Okay, let's use something else. I don't know how to cause confusion now. This is already saying Man U. Okay, so now let's assume that Chelsea wants to play against Eimba. This is Eimba, guys. Eimba, there are people coming from up to fight. There's a force coming like this. We know that Chelsea will win Eimba any day, anytime. Right? So what we're saying now is, some people are now asking me, can we join Eimba when they are fighting back to make some money? Yes. But it's not good. That's what I'm saying. Because you are clearly going against this. I would rather join Eimba if they have succeeded in, breaking this wall. Right? But you know that the fans will start to go home. And then you can score and score and score and score, especially if it's raining. Okay? So you get what I'm trying to say here. Now, what I was saying is, this is usually the beginning of a new trend. And then what you observe is that there are now falling tops. Falling tops signify the beginning of a downtrend. Rising bottoms, okay? Rising bottoms signify the beginning of an uptrend. So if the market starts to print higher highs, okay? This is a high. This is a higher high. Higher high. No, this one now we call this a low, right? Then we call this a higher low. Then we call this a high, right? Then we call this a higher high. Call this another higher low. Okay, and then the next one is another higher high. All right, so what you're seeing here is the market this is higher than this. So this is a low, but this low is another low, but it's higher than this. So we call it a higher low. And then this is a high, but this high is higher than this. We call it a higher high. This is another higher, this is another low, but higher than the previous one. So we call this a higher low. Okay, and then for the downtrend is the reverse. Okay, so if the market is going down, okay, right? What you have here is a high and then a low, right? And then you have a lower high, right? And then you have a lower low, right? Then you have a lower high again, and then just like that. So this is the market came down, the price reduced, the price went up a bit. Okay, this is a low, okay, lower than its previous high. This is another high. This is a high, but this high did not beat this, so it's lower than this high. It's lower high. So this is how it is. Now, what technical analysis is saying is that when this thing starts to form, you know that when you see these ones like this now, when you see this now, this is a genesis of a downtrend. So you cannot define the market to be in a downtrend unless you have something like this. You can't define the market to be in an uptrend unless you have something like this. Now, what do traders do? They now say, okay, now the market is in an uptrend. If the market is in an uptrend and the market comes back to this line, the line that generated this uptrend, it gives us opportunities to trade anytime it comes there. But it doesn't stay that way forever. It will eventually break. When that breakage happens, traders are always ready to take the reversal. Now, what they do is they will now say, okay, let's wait and see if there will be a failure on the line. So the market breaks here. When it breaks, a lot of people are waiting. Some people will trade here immediately, but most people don't, including you. You will not. You will wait to see that there is weakness on this trend that is moving back to the trend line. Two things. There's weakness on this trend. You compare it, how you know there's weakness. The candles will not be bold and big and strong. Right? You see that the candles that are pushing back to the trend line is not, they are weak. So once the red candles, that is the downtrend, reappears, they go. Okay, because these guys don't have the strength to push this thing anymore. Okay, so if you are strong, if you are a bad gang and you are strong, you're not supposed to allow somebody to break your fence, is it not? So for you to allow them to break your fence, it means that something is wrong. There's now some people sliding. There are now, maybe your leader has been muting. You know, is it not? You know, there's a problem inside. So before you know it, the other guys will run away. And then this thing now looks like, when these things happen, you now look at the chart and then you are seeing a reversal. You zoom in, you now see something like the trading range. Market goes up, comes down, goes up, comes down. Okay, so these are the two strategies we are going to use to trade. All right. Now, what you're going to do for me is very simple. Whenever the market is in an uptrend, you open your chart, you see that there is a place where there are shapes. You can pull out a line from there. It's called a trend line. You connect it. When you click it now, you come to the screen, you press it, hold it down, and drag it. So when you do that across the screen, let it touch the bottom that you are seeing. Now, anytime the market comes back to that place, you observe it to make sure there is a shaved bar. I don't care the shape of the bar. I don't care the shape of the bar. Whether it's a thin bar or whatever, what I'm interested in here now is that at least there's something we call doji. Doji is an indecision candle. When the market gets to this point and is printing, indecision means that both of them are struggling. The price is struggling. Those kind of bars, they always look like this. They have small bodies. What this means is that The market opened somewhere in the middle, went down, they disagreed, they pushed the price up. Is it not? People up refused, they pushed the price down. And then it now closed somewhere around there. Right? Close somewhere around there. They don't want a higher price, they don't want a lower price. That's indecision. When you start to see this type of candles in an area of sensitivity, you know that the market's about to react. So when we find this type of candles around those areas, we now know it mustn't have equal on both sides. What I just need to see are small bars. Where the price started from is where it is ending. Do you get the picture? It started with 90, it's still around 92. Now, who is eventually going to win? That's what we're saying. So when this thing starts to happen around this area of significance or this area of significance, okay, because the same thing happening here is what's happening here. If you now start to see something like this around here, right? Of course, when the market approaches here, you should see something like a doji. We call it doji. I don't care about the name. You can read them up. Okay, I know all their names, but understand what is happening. When you start to see indecision candles, you now know that okay, the market is reacting to this area. Traders are now fighting. Buyers and sellers are fighting. Who is going to win? The next candle will tell you. Next candle now becomes all red. All red. In fact, sometimes you might have wicks on the other side. All red, what does it mean? It means that these guys are ready to go down. Is it not? They fought. And then now, these guys are ready to move. What I want to see is that the price, the low of the price is where it ended. I don't care the name. They call it Marubuzu. They call it Shave Bar. I don't care the name. But I just want you to understand what's happening there. If you have a Marubuzu, it is telling you that the market got to that point and it remained there. There was no rejection. Do you understand? There was no rejection. So if there is no rejection, it means that traders are okay with this price. The next day, or the next bar will print more lower candles, usually. Does it make sense? So you're going to start looking for these things now in your chart. If I come here, the market gets to this area, I see my doji, and then after seeing the doji, I see a clean shaped bar. That is a bar that has little or no wick. We call these things wick. Wick is candle wick. W-I-C-K. Okay, call them wicks. Now, when you come there and then you're not seeing any wick, you're not seeing any wick on the candle, you know that these people are ready for higher prices. What do you do, guys? Now, let's say we're on a 15-minute chart. On a 15-minute chart, we have seen something like this on this line. What you do is, from this top, just one tick above that point, you're going to place a line on your chart, a horizontal line that's going to show you the price at that point. Because you tell your calculator. Now, if this is happening because you're using your phone to trade, you're using your system, some of these things are easier. Okay, because you can just drag your mouse up to know the distance from here to here. Right? So, but if you're using your phone, you can still do it. Okay. Now, let's assume that this is how low it went. So you place another line here. So you place two lines and take note of the prices. Now, what you just need to do is, yesterday I showed you what a pip is. This is now going to be, let's say, 1.30259, right? This one might be 1.302, let's say, 01, right? 01, is it not? Now, of course, we are going off. That's why this is 0. So that if you are not sure of the calculation, you can quickly subtract it. Now, what you have here is 59 minus 01, is it not? Or sometimes you can just disregard the bet. Your trading currency is almost insignificant. So you just take 5 as the difference here. Do you get? So now what we're trying to generate here is very simple. We want to know how many pips are we willing to permit. Because I know that if these people have given us indecision and Maruguzu, they are not supposed to allow any market to come down here again. Do you get? Is it possible for the market to come down and still go up? Yes. But our technique says that traders are now ready for higher prices. The market is not supposed to come down here. You have to trade mechanically. That's the only way you make money. If the market comes below 30201, it means that these people are not serious about going up. Does it make sense? It means that they're not sure about going up. So I'm going to say, okay, I want to put in $200 into the, 200 naira into the 5 pips here. You know how I got 5 pips, Abi? So I want to put $200 into the 5 pips here. So I will ask my calculator, assuming this is Euro USD, let's see what I'm going to do. So we're going to do it now. Now, then you will now set, because I'm going to show you how to place. It's called, you will all be placing pending orders for now. Don't ever place a market order. Now, market order is called as a market execution. When you place a market execution, it means that you are desperate, right? You want it immediately. So you're going to pay for the spread. Do you get what I'm saying? It's like, say, it's like coming to an Apple store, it's 50 naira, you get there, you now say, okay, I want to buy this apple whenever it's 50 naira. So whenever it's 50, it's now 55 naira. You now say, no, I want to buy whenever it's 50 naira. You tell the cashier, anytime you will reduce the price back, let me know. I want to buy 500. So let me know when it comes down, right? Now, if you want it immediately, you buy it at what, 55. That's what market execution is. You are desperate for it. You are sure it's rising. So you take it immediately. It is an emotional way of trading. And then, for you to do that, it means that you didn't calculate your risk. Do you get what I'm saying? Because it means that you have just decided to take any lot size. Right? You just decided on your own that, okay, let me use 0.2. And then you just say buy. That button is boldly written. That button is not for you. As an intelligent trader, you are supposed to analyze the market and place orders. You can place a limit order or a pending order. I'll show you that in subsequent class. You give orders. So you tell your broker, okay, I want to buy. That's how I mean, you're making an analysis and then you're telling me, okay, whenever the price comes down to, whenever the price of Coke, you tell breweries, whenever the price of Coke comes down to 75 naira, let me know, I want to buy. Is it not? You have placed an order. You have money in your account. When it comes down, they will subtract the money and give you your Coke. That's what's happening here. So, but if you're going immediately to buy it from them at the gates there, you can buy it for as much as 100 naira, 95 naira. So, take note of that. You're only going to place pending orders. Right? Your broker might call it something else, but what it means is that you're placing an instruction to tell the broker that okay, you know that you have to wait for this candle to close, Abi? You wait for this candle to close. So once the candle closes, the next candle opens here, Abi. You can go up, you can go down, continues to move. Am I right? Continues to move. It depends on the time frame. That's why I said if you're using like a 5 minutes time frame, you might still be calculating all these things, and then the next candle is here. So the best thing to do is use a time frame that is comfortable for you for now, while you are learning. Then maybe later on, when you now start to know how to do all those calculations and everything really quick, you can come down to maybe 5 minutes. Because the strategy will work on all charts. If you open any chart, it's the same thing. The strategy keeps working. The only thing is that you stay where a lot of traders are so that you have other people to support your motion. Now you have this. Then we're now saying, okay, this is the price here. This is the price here. We're going to tell our calculator that what we are trading is, now mind you, look at the information you're giving your calculator. I think there are 4 information. You are going to tell your calculator which market you are trading. Okay, I believe everybody has that calculator. So you tell the calculator what market you are trading. Let's assume that what we are trading here is Euro USD. Okay, let's assume it's Euro USD. And then you tell the calculator what is the number of pips of the stop loss. I've told you how to get it, Abi. You place a horizontal line where you want to enter from, and then another horizontal line where you want to take your profit from. Okay, and then in setting your order, usually you can do everything at once. You can now calculate where you get 10 pips profit, right? So you now say, let's say 10 pips will now be 1.30. We're going to have 3.5, Abi? 3.59. That's the difference from here to here. Abi? That's 10 pips. So you will set another horizontal line here to tell your broker that whenever, this is where you're placing the order now. Tell your broker that whenever the market gets to this place, take my, close it for me and give me my 400 naira. Right? Close it and give me my 400 naira. Okay, so these are the things that you can do, but the calculator doesn't need this information. It's your broker that needs it. So I'm just giving you what the calculator needs for now, so that we can now see. And then what is the aim? The aim is to know what lot size to use, so that if this thing goes against us, we lose 200. If it goes in our favor, we make how much? 400. That's the essence of doing this. So don't skip this part. It's very important. Get the prices. If you're using a system, you just need to click here and drag your mouse up. It will display the pips. Okay. If you're using a phone, place the price at the base, a line rather. When you place a line, you see that line shows you it will be shaded, the price. You place another line here, it will be shaded again, the price. So you can use your eye to just do the calculation. And then know that, okay, this thing is 5 pips or 10 pips or 25 pips or 50 pips, depending on your time frame. Then you now say, okay, if that is it, then I am looking for 10 pips profit. And you put that line again so that when you are placing your order, you can do correctly. Now, when you have gotten the stop loss or the pips, we had 5 pips here. So we'll come and then tell the calculator that we have 5 pips. And then also you tell your calculator that you're risking, you tell your calculator the amount in your account and the percentage you're risking. Those are the 4 things. So you tell it when I say markets here, I mean Euro USD. And then this is stop loss. Okay, you see all these things are labeled on the calculator. This is stop loss, this is market, stop loss. Then your account balance. All right, what you have in your account. You tell the calculator, and then the percentage you want to risk. Okay? You want to risk 1% of your account, you tell, oh yeah, let's do it now. Open your calculators. Then after we have done all of this, we will now, after we have done all these things now, we're now going to open the market directly. So we open the market directly and then, yeah, sure. It's not open. Why? All of you, your own is not opening. Have you tried it? And it wasn't open. It's the same one that you have that you have. Okay. No, down is direct. Direction. So you can follow it now. Okay, so look at it now. Oh, you start putting the information. Look at the information. Account balance, you know your account balance. The account balance on your MT4. This is just okay. It depends on how that's a risk management, like money management subject. And then it's not only we can exhaust it, there are a lot of factors. Sometimes if you want to take sample trades, okay, so he's asking that if after maybe 10 trades, your account balance would have changed, Abi, your account, the money in your account would have maybe increased or decreased. You might now be having 11,000, or you might now be having 9,000. So are you going to keep using 200, or you now use 2% of that money, which is 180? Do you understand what I'm trying to say? Are you going to now change your money to? Are you going to start trading with 180, or you keep on trading with 200? What do you think you will do? Do you trade with 2% still, or the amount you are risking? Well, let one person talk. If you want to talk, just raise then. Okay, yeah, wait, one by one. You people can hear him, I mean.
Eventually, you can't keep using that 10,000 percent. You have to change to 2,000.
So it means that if you have grown your account from 10,000 to 20,000, you are now going to be risking for 400 instead of 200. Okay, any other person?
No. For example, now if you have like $10,000 account and you've grown it to 20,000, you're still advised to. When you want to calculate it there, you put the 20,000 there, so advised to risk the 2%.
The 2% is now a different number. That's what we're trying to say. Are you saying that we should, because the 2% is no longer 200, it's now 400. If the money there is 20K,
you're still supposed to be risking the
200. You're still supposed to be risking 200 instead of
increasing it for 400.
Because now you have more money, so you should still use 200. So if you lose your money, you should still use 200. Let's say your money has now
decreased.
Yes, your money has now decreased to 5,000 naira. Are you going to keep using 200?
No.
So what do you do?
100.
So you see, you see now that it's not what you said now is wrong, right? Yes. So you stick to the percentage. What happens is there are different ways of approaching it. If you want to tell yourself that I want to take 20 sample trades, if you're going to take 20 sample trades, it means that you're going to stick to a certain amount. So your 2%, you're not considering the percentage balance. You're considering you're taking your risk based on the dollar amount. You can take your risk based on dollar amount. That's naira amount. That's the amount you want. You can say I want to be splitting it, or I want to split it into 20 trades, and on each trade I want to take 200 naira. So regardless of what is in your account, you use 200 naira. That's dollar amount risk, right? Now you can also decide that I want to be using 0.5% of my account. No, it's not working on iPhone. Maybe for senior boys and girls. So if you are using iPhone, you go online and use the one. All right. So if you are risking 2% per trade, you now if your calculator is asking you for, you know why it's it's good for you to stick percentage. From my own opinion, you make more money. Make more money. If you have grown your account to 20,000 naira, you are still implementing your strategy. I've told you guys that you are going to make a lot of money if you do the right thing. Okay, because if you now say, except like I said, you want to stick to sample trades. Sometimes at the mechanical stage, we'll tell you, okay, stick to 200. Okay, take just 200 naira and take your first 25 trades. Let's look at it. By the end of 25 trades, you should be able to identify your edge in any strategy. You don't need more than 25 sample trades. So if I open an account and I tell myself, okay, I want to know if this strategy is working well, what I will do is take 25 trades and analyze it. I should have seen all the clusters, how much they were. I should be able to now calculate my win rate and risk to reward after 25 trades. So when you are doing something like that, you can say, okay, let's just use 2020 like 2% or 200 naira. So that when this thing is over, if I look at my account balance, I don't want to see at any point in time more than 200 naira loss. It can be 1999999. Can be, but let it not exceed $200. That's what we're going to do now. Okay, but later, it means that you keep your balance fixed and then just press 2% so that you use a fixed amount on each trade. Then when I come in now and look at your history, on all the trades that you lost, I want to see 2% loss. Abi? Then on all the trades that you won, I want to see a 4% gain. Abi? Yes. So by tomorrow, we will now look at all of them. Okay. Then after now, you can go back to using 2% progressively. Okay, but the thing is, there are algorithms then that will now, because when we look at your account balance, we have to know that, okay, this thing was actually 2% of what you had at that time. But it would be wrong for me to open your account, 2% of your money is 200 naira, and I'm opening your account and I'm seeing you losing on one trade 600 naira. That's the problem. And this is what causes that thing. You told your broker that if the market gets to this price, take me out. The market now started coming down. You now move this thing down. You just go there, you edited it, and you change the price. So what happens? The market will exceed this place, and you are expecting it to still turn. So it comes down, exceeds that place, and continues to go down. And then before you see it, you cannot bear the loss anymore, you lose it. Okay, so just be mechanical, that's all. Be mechanical. If this one doesn't work out, go to the next trade. It doesn't take anything from you. That's the best way to make money. Long term, that's the best way that I have seen. It works. We have been generating ROI for people for many years. This is what we do every day. If you insist that this thing, you want to reduce, you want to bring down this line and take it down, that what if this is what is happening, or this is what is about to happen? And then it now starts to turn, you now say, hey, I said it now. And then what happens? You retest, and then it continues. Have you seen the market running in New York session? Especially when Trump is talking. You will just stand like this. After removing your stop loss, you will stand and you see your account will be drained. Market will run hundreds of pips in few minutes. But don't worry, you will see what I'm saying. To give all these orders, place it. And go away. If you cannot watch it, leave. Place your order and close the phone. Come back later and see how it did. Like that, you make money. I'm serious. This is work. Time memorial, it works. But why are people not making money? Because they cannot implement it correctly. Why? Because they lack patience. Everybody wants to double their account. I've seen so many investors that come to me and say, do this thing now, give us money now, do this thing now. It doesn't work. See, I can do it in a month, we double your capital. We can do it. It's possible. But we cannot do it every day, every month, every year. It can be done. I'm telling you, nobody can. Except you don't want to hear the truth. A lot of people promise that they can, but nobody can. All those guys are imposters. Many of them are not traders. Many of them don't open their charts. Okay, a real trader will not give you anything more than what I'm giving you here. The only thing they can do for you is maybe give you some strategies that will help you. But even if they give you a strategy, every trend following strategy is 60%. Why? Because it's already happening, you expect it to keep happening. That's how the market is designed. Every reversal strategy is less than 50%. Don't let anybody deceive you. You are betting that, do you know the risk to reward here is enormous? If this candle is worth 5 pips, and I'm taking I'm taking this, I'm not accepting any less than on this kind of trade. Even if you're taking 1.5, you might still make money at the end of the month. Abi, if you say, give me, instead of 2, give me 1.5, I'm okay. You still make money because your win rate here is high. This is a 60% win rate. Okay, the one where the trend is already going up, you find a shape bar and you take your 2% on it. It will continue most times. It will continue and it might not go below the low of that strong bullish bar. Okay, so this thing works a lot. And then you can take 1 is to 1.5. Even if you take 1 is to 1 on this trade, because you have a 60% chance of winning, you eventually make money at the end of the day. Am I right? Yes. Because there's an extra 10 for you.
Sorry to drag you back. After in this uptrend now, after we found that indecision can,
yeah.
Then that next, I don't know the name you called it,
Marubuzu.
If you want to measure the stop loss, it's like below the open of that.
No. Wherever the wick is, the low. If it's an uptrend, it's not just the close or whatever. It's the low.
So from where the wick is to
just look at the way I did this now.
Yeah.
I don't want the market to exceed this thing again. I don't want it to exceed here. Okay, so I'm hoping that other big boys will be there to defend it with me.
What if you put your stop loss there and the market just comes there, that levels continue going up?
It's possible now, it happens a lot now. It's a losing trade then.
But
so what some people will tell you is you just give it a little buffer, give it small space.
That's what I wanted to.
Right? Some people tell you to give it small space. We do it, even me, I do it. Just keep the little space so that if the market is still dangling around that area, it doesn't knock you off. But now this thing happens. When you have that mindset and you know that okay, it's possible for the market to come and then trigger these stops and go back up, right? You kick off this thing, right? You kick off the stop. And then it comes down and continues to go. Are there markets that don't come here anymore? Yes. Of course. I don't want the ones that will come here. Don't come here. If you come here, take my 200. That's the mindset you have to have. Because if you permit, it's like saying you're on diet and you just want 1 bar of chocolate. I don't know if you believe. It's like saying you don't want to smoke, but you just collect from your guy and just, take small. You are breaking the habit. You don't want to drink anymore. The doctor says don't drink any bottle of beer again. And then somebody calls and say, I'm at so place. You say, oh boy, I don't go to come because my doctor said, you don't go drink now, you go eat other things. And then when you come here, the Hennessy, have you seen Hennessy that the ice, you'll be seeing it like this as you know, you just say, I think I try one. I think just say one will heal. You get the point. So, and then what happens? You permit one. Before you know it, half crate has gone down. Someone say, wow. And you don't know what those bottles can do. But you know what whole crate has got, yes.
I'd like to know what your advice is on that. It's possible for us to get this upward and we do hedging. Like
Hedging.
Yes. When
That's on both sides.
Yes, on both sides.
It's not advisable. You don't hedge except you have reached a good level of professional trading. Hedging is risky. And then you need to have enough money in your account to hedge. And then you are already breaking the habit. Because you are now saying that okay, market is within this area. If it shows me profit, I will close that one. Allow the bad one to stay. Like if it shows me profit, I will close it. You're buying and selling at the same time. Yes. That's what I'm saying now. You're buying and selling at the same time. It's not good. But at the same time, it's possible, but reduce your lot. Will you agree to reduce your lot? If you have a mindset that tells you that yeah, market doesn't go straight up, it doesn't go straight down. It will go up and come back down. Go look at any chart. It will revolve around that area. A lot of people lost money there. But now the market is back to that place. And then some people will tell you that don't use stops. The market uses it to steal people's money. But now, in this market, the only defense tool you have is your stop. You cannot control what the market gives to you, but you can control that money in your account. This is the only thing you can use to control it. How much you give the market. This is the only thing this is your only defense tool. There is something I do, which I am not going to be able to show you everything at the same time. When I'm trading a major trend reversal, I don't stop at 1.2. Okay? When I'm trading a major trend reversal, I do not stop at 1.2. What I do is, let's say I'm taking a lot size that allows me to take like there's something we call partial close. Partial close is on my 200 naira. Okay, I've opened the trade with 200 naira. Now, instead of taking 400 naira, when the market gets to 400 naira, I'm going to take some part of that money and allow, let's say, instead of taking 400 naira, I will take 300 naira and leave 100 naira to continue moving. In so doing, I will also protect my stop. That's what they call it. You move your stop. Now let me use this one that is already here as an example. The market now was here. It got to this point. Let's say the market has formed candles that got to that place. Now what I do is when it gets here, it's partial closing. You don't need it now, but I'm just answering the question and then trying to treat some things at the same time. Okay, so you learn all these other ones later. You adjust you close partially. You now come there. If maybe the calculator told you to use 0.3, you now reduce it to, you now modify it to 0.1. When you modify it to 0.1, you know what happens? 0.2, the profit of 0.2 will now be secured. Then you now have 0.1 running on this trade. So that when the market was here, what 0.2 is what will be given to you. Then 0.1 will keep moving. Now, when you have done that, what I will do is I'll protect. I usually protect. If not, you will lose back that 0.1 if the market reverses. Okay? That 0.1 that is moving, you will lose it if it comes back to your stop. So usually what I do on major trend reversals, I usually expect major trend reversals to go. That's why I tell you, if I know that the possibility of that thing happening is low, you're supposed to pay me more money, if I'm right. So when I come here, once it gets to 1:2, I don't accept anything less than 1:2 here. I can accept the 1:5 on that one. But I can't accept anything less than 1:2 here. When it gets to 1:2, I will close out and then move my stop loss, which was originally here, I will now move this stop loss to somewhere here. But now I have, let's say I open this trade with 0.5. If I open this trade with 0.5, I can remove 0.3 from the running trade so that 0.2 will keep on moving. Now, that 0.2 that's what I do. This thing can give you as much as, instead of that 400 naira, can give you as much as 500, 600, 700, 1,000. Yeah. No, you don't need to close it. What you do is you can't even do what I just said. You can't do it with a phone. If you want to do partial closure with a phone, you have to open several positions. What you do is, as this trade is now, instead of taking, the calculator tells you 0.5, instead of taking 0.5 on one order, you now break it down to 0.3 and 0.2. So you now set 0.3 to close at 1:2 and allow 0.2 to keep on moving. Do you get? But if you're using a PC, you right click on top of the order, you see modify order. Click modify order, you can now change it. When you get to that point, you can change it. You can modify the order. The only thing you can modify is where you want it to close, stop loss and take profit. But you can modify the order, the contract size. The lot size cannot be changed. When the order is already moving, you can't change it. The market is open, you can try it. You can't change it. The only thing you can change is the price you gave your broker. That's what I was saying, that you can take out this. You can modify it when it's already moving. You can take out this, you can modify when it's already moving. So, but you cannot change 0.3 or 0.4 that you started with. So that's why I now said, if you want to do that, open two orders. Let it not exceed what the calculator said. Then close them or arrange them how you want to take the profit. That's what you can do. That way. Yeah.
Okay. Most times, by the time you get probably your trade has gone higher than what you expected, it is best to close it. So, yeah, that is you shift your stop loss. The entry point. Yes. So, my question is, doing that definitely it means if the trade goes against you, you lose nothing and you gain nothing. So what's the benefit in that?
The first thing to do, the question should be, is it even a good practice? That should be the question. It's not. See, before you reach 200, you already accepted that this 200 can go. If you are rolling a dice with your friends and you be gambling, you are rolling gambling dice, right? With group of boys. When you bring out, maybe you're going 100 naira on the dice you are rolling. Are you not telling yourself that this 100 naira is already gone? That's the advantage gamblers have. They know in their head when they are starting to maybe do a certain thing. If you want to maybe say that Chelsea is going to win in betting Nigeria, you are going to now say this 100 naira is gone. What you are looking at is the potential of the return, is it not? So that if you lose that trade, you are feeling bad that you lost the bigger money, right? You lost the maybe 100,000 that you would have won, not your original capital again. You have forgotten that one. What you are now considering is the bigger, the main money. That's what we're doing. We're saying that the 200 is already gone. Why are you protecting it? Why, okay, now this candle is forming, then you now carry this your stop loss and protect it here, so that you don't lose your 200 naira. And then the market comes back down like this and still goes. You won't make money over time. It's a bad habit. You are entering here telling the market that I've given you $200. What made me to say I protect on this first place is that the market got to my target. When you open your chart, look at the sizes of this candle. When the market gets to 1:2, it will reverse with speed. Check it. What I'm telling you is based on the way the algorithms are designed. The strategies I'm giving you here are powerful strategies. Once the market prints 2 times the size of the candle that triggered the trade, it reverses. Even if it doesn't reverse completely, it will form a red candle here. The red candle is because traders are taking profit. You better take profit with the professionals. Sometimes it will blow, it will keep on going. If it happens, fine. But let it be that when it got to this area, we took profit. With that, you make money over time. You get it? Okay, so yeah, let's take one trade. Let's take one trade. Open your chart. Now there's a very simple way to know to identify this. They call it moving average. Moving average is like taking the average of the prices. They take the average of the price and then they plot it on a simple line. So if the market is going up like this, they will now come and tell us that if I take 20, the average of 20 prices, the average of all the prices here, maybe 110, 120, 130, 140, 110, 150, 190, 80, all the average will give me a point. The next average will give me another point. The next average, all the average of the past 20 bars. As a new bar forms, it will give me another average. Now, this average is called moving average. So, at the end of the day, if you open, these things are called indicators. If you open your chart now, you now see that this line, of course, is connected. They don't leave it as dots. So they connect it, and then you now see something like this. So it will just show you that the market is going up. Sometimes the moving average can even be coming from the bottom like this. So, but what I want you to understand with the moving average is when you put that moving average, it's like a rope, it's a wire. You know, the line shows you clearly that it's an uptrend. Because if no matter how up down it goes, that line is a bit steady. Shows you that okay, the market is in an uptrend. You can take the average of, I use 20 MA, and sometimes I add 50 MA. So the 20 moves faster because it's closer to the price. Abi, 50 will be a bit slow. 50 will be below it. So if you have a clean uptrend, you see that the 20 is there, the 50 is following it at the back, under it. Right? It's in your chart. Okay, so I'm just saying all this when I open your chart, just start. Right? So if you open your chart, you're going to see. Now, if you want to trade something like this, some traders, that thing is called dynamic support and resistance. They use that line. Instead of drawing the lines by themselves, they will say anytime the price comes and touches that 20 moving average and prints a Marubuzu, let's buy. It's done. Okay, some people say if it comes to the 50 and prints a candle that says that the buyers are back, let's buy. Okay, so you will see all those things in your chart, and then it's going to lead us to something else I'm going to teach you. Okay, yeah, so open your chart now. Let's look for, I'm going to show you with one of the phones how to set it up. So you just follow me, then from there we start. No matter how scattered the direction goes with. I want to know when what is that. It depends on what you're trading. I don't think I don't think the only thing I do is the trading moving average. If I see a moving average that is slow before, these are the strong trend. And that is a strong trend. If I see it's like it means that the market is held, it's obeying support and resistance. So if I see 100 like that, I know it's yeah. Okay, how you spot it is there are a lot of indicators that you can use. Some people like to use fractals, but you can use your bare eyes to see that the chart is now or the chart you are looking at is going up and down. Okay, let's open Euro USD. Okay, you can see that the market has been okay. I'm on 5 minutes. Market has been in a trading range. Abi, Euro USD in the trading range. You can see it's not going up, it's not going down. Abi, no. Okay, but look at your 15 minutes and look at yesterday. Today has not really moved. And you know why today is not moving, Abi? Today is Friday. The trading activity is not so much. Not always like that. But on Fridays from 12, traders leave. And then we are all waiting. What they are waiting for now is for New York. New York will come in, move the market, and then that's the end. It just stays. It's almost like a trading range like this throughout. But you can see what happened yesterday. Yesterday was Thursday. See how much it went, right? So of course, when it moves, people make money. Now look at some of the things I am saying or I've been saying. Look at yesterday on the 15 minutes time frame. If by default, I think you have a 20 moving average. Let me verify that. By default, the red line. Okay, that's what's on my own chart. I don't know. Is there any line? Yes. There's a red line that is following the actual price. Yeah, that's what I was trying to do when I put in this line and told you it's giving you the average of the prices. So let me see. I think that's 20. So under indicators, if you look at the moving average, okay, that's 10. It's 10, right? It's 10. You can change that thing to 20. Okay, 20 and then exponential. Okay, let me show you. Follow me. See the F, that F sign there. Those are the indicators. If you need assistance, please let me know. Then you can also talk to Pipsurgeon. You will make sure you are following. So with that F, you will see all the F are all the things on your chart, all the added things on your chart. If you start drawing like a line and everything, you see them now. They'll be there. Okay, so no, this is for indicators. Indicators is different from the other. There's another one where all your lines will be. This one is for just indicators. Indicators are programs that are designed into the MT4 to aid you. Like somebody was saying, how do we know all these things? There's another indicator called fractals. Anywhere there is a swing low, it will put a small arrow that shows you that this is a low. Then it will show you another arrow that this is a high. Show you another one that this is a low. What I was trying to do here. So anywhere you have something like this, there will be a small arrow. It's an indicator. It's there. You can add it. Good. But usually you now begin to use your eyes to see all this. Okay, so on the main chart, what you have there is moving average. Okay, so change it to 20 MA, 20 moving average. 20 moving average. Yeah, okay. Now, the method should be change it to exponential. By default, it's on simple. Change it to exponential. Exponential means that you should put more emphasis on the current prices. Okay, if you put simple, simple is just a general average. But exponential means that if the market starts to run up very fast, it should tilt up fast also. But if you have simple, it won't respond to that change in the market. Okay, so exponential is better. Okay, so use exponential. Finish on the upright. So you put down. Okay, now there's something I want you to see. There's something I want you to see, guys. See, do you see that? Do you see that there are two ways, there are two things here? From where this sweet long trend started, there is a doji and a marubuzu. Do you see it? Yeah. From the genesis, after the Asian session. Yes, yesterday. Euro USD yesterday. You see the indecision. Just at that point where there's a green candle, a white candle. Immediately after the white candle, there's an indecision bar. Immediately after that indecision bar, there is a marubuzu. Yesterday. 15 minutes yesterday. Yes. 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 Yes.
The best place to be is in the classroom.
Yesterday. 15 minutes. 15 minutes. Change 15 minutes. This Euro USD, right? So this
John.
So this is what I was that decision and the strong and going down started to trend. Okay, so now if you put a line across the highs on that Asian session, you will see that you would have been able to spot this opportunity even earlier. Are you seeing that chart? Look at the market was in a trading range, but it's maintained. If you can put a line across it, guys, put a line. Let me show you what I'm saying here. See this high. See this one is decreasing. Falling tops. Am I right? You see here Euro USD on 15 minutes time frame. Euro USD on 15 minutes time frame. Yesterday. Look at yesterday. Today is not moving. Today is not moving. Yesterday, just yesterday, once you have 15 minutes yesterday and you don't zoom out too much, you should see it. So I believe we did not conclude this thing. What was the amount you got? Did you finish up? No. Okay, we'll come back here. I'll show you. Come back here. I'll show you now.
This is just already some again. My eyes they pay me. I don't know which kind of foolish injection.
Yeah. Let it settle down. Let's settle down and bring yes, let me bring this. You don't see it. Then you should relax here. Show weakness here. And resume. Weakness is that the bars multiple mixed color. Weakness. You don't see strong strength in that. You see a lot of weak on the upside, rejections on the upside. And then once it gets here, you see somebody that says, okay, let's put down.
Once you see one strong hand,
yes,
down.
Yes, it shows that these guys have won. Okay. So see what I'm trying to say. Now I want you to put the line by yourself. From the close of day before yesterday to the opening of yesterday, you can place a line that runs across the top. Now, okay, this is today. Those of you who can see my screen. This is today, right? Now I'm scrolling back. This line is showing the division of the days. So yesterday started. This is the whole of yesterday. This is from here now to here. You can see it. That's the whole of yesterday. So now, what I'm saying is, yesterday's traders, they had a point of resistance here. So the market came to this point, went down, came back here, went down, right? Came back to that line. It didn't break. The one up here, the upside, came back to that line. It's simple. That's what I was showing you here. If I open the other place now, see this, when you touch here, the circle comes out. The shapes. If I take the shapes and I place a trend line, see the one they wrote trend line. Trend line doesn't give you the price at the ending. Trend line, you just use it to trace a trend. Abi? So I will take the trend line. Now the trend line has been highlighted. So I want to take that trend line across the highs of this market. So see what I'm going to do now. I'll place it from here and drag it. Right? See, do you see what I just did?
From like that class, I don't know. Bless they don't. I don't know where they did this their class like this.
Close of day before yesterday.
I know you're not inside leisure more because this place to be like leisure more at all.
Yesterday.
No be like a shop
You
price.
should be able to do a line like this.
No be like their
top.
office. That was what they're supposed to do that day.
Yeah, just.
I'll call them.
They tell you to inside shop,
like, make sure they highlight.
I don't go to the office before. Now inside the office they want to do.
Then you press out.
The person that is only the camera safe, there's no absence. Just don't know do anything. Okay, let's do this finish. Let's do some finish.
At the top, at the same.
Where you need the crease.
See my own.
Eh? Why? Mo ṣe ni jẹ. I said the chop, I go say the chop and finish. Now no verse. Ah.
Okay, so you can see this phone, Abi. See what I did with the line. I just connected. See, this is the beginning of that fall that yesterday. Can you see? So he was respecting that area before it started coming down. Right? You can see now. This is yesterday. This is yesterday. He was respecting that area, right? Was respecting that area before it started coming down. Right? So what we're saying is that when the market respects this place, see what happened here. He got to this point, reverse, got to that point again, reverse, got to that point again. Traders were ready to sell. Yeah. And then even if you didn't take that, look at the candles here are small candles. Candles here are small candles. There is a black candle here that is a good Marubuzu. I'm not even talking about this big one down here. There's one that you can take. Now, once the market touches a trend line twice, the third time, if that area is sensitive, if I can draw it, it might not work all the time, but that area is important to traders now. What happened here was the market touched here and touched it again. This area is a point of interest now automatically. So we want to see, will it break it or will it respect it? If it respects it the third time, I mean, see what happened afterwards. He fell throughout the day. Some traders, this is why I tell you, I will take 200 naira will be on this black candle here, right? 200 naira will be on that black candle. There is a white candle after it, but it didn't exceed it. I told you that there are people that will defend it for you. The next, after the black candle, within that Asian area, there's a white that attempted to go up but failed. Now, when it fails, see what happened. He gave you as much as 2 times the size of that black candle, right? Almost immediately. Within 15 minutes, you have 400 naira. Look at it now. See the size of the black candle you entered with. Within 15 minutes, it came down to this low. You would have triggered your order for 400 naira. And then you can go your way for that day. But people like us, what we do is, when that thing happened there, see, I will not close everything. I can take, instead of taking 400, I'll take 300. When I take 300, I protect. If I had done that, I would have lost this trade, right? Because the wick that came back up to test the entry will knock me out. Is it not? Are you seeing this chart? So what would have happened? I would have made how much? 300, just 100 naira profit, and gone. Are there days when this thing will not come back like that? Yes. But I want to tell you something. As time goes on, you begin to understand the chart better. If I am sitting on the chart in a case like this, whenever the market takes, see what you are seeing here happens on every chart. See, this is the best thing anybody can give you as long as this trading is concerned. This is what the computers are programmed to do. There's no strategy I have seen that is better than this. Once the market takes as much as 2 times, it will reverse. Where is it going to reverse to? It's going to take out the stuff on everybody that entered with the Marabuza. Look, go back and back and back and back. Many months, start coming forward gradually. You will see this thing happen over and over. The market goes when the professionals take their profits at 1:2. It comes back to test the entry. 2 things can happen. It's either it reverses, either it's not the direction of the market, or it will take off. Right? Now, what I'm saying is, if this is what the computers are doing, the computer is already telling you that, okay, there are some people that instead of taking their profit here at 1:2, they didn't take it, they left it, and then they moved their stock down. They left with nothing. Okay, and then they didn't have any stop, they didn't have any target, they just left it. Yes. That day. Today will not work. Tomorrow will work. The next day will still work. And then I can't tell you everything now, but you will see it in this whole journey. I'll keep on showing you all these things one by one, and then you begin to see how this thing prints its candles. It's a computer program that prints. There is a way the computer is designed to work. That's why I tell you, no matter how good you are, you can never outsmart it. At every point in time, it is printing candles that make you feel like you can buy or sell. Till that candle I told you about, a lot of people kept on buying and selling. Even when these big candles came out, a lot of people were still buying. That's what the market does. It will print a grid for you. You buy, what happens? It will stop you. All these people are counter traders. Nothing has inertia. You keep falling. Now, and I told you that, now compare the size of this candle to to the entire move. Compare the size of that candle we entered with to this move. This is almost, if you open with 200 naira and let's say you protected about half, so that what you have exposed is 50 naira. With 50 naira and on this kind of move, you should make nothing less than 700 naira. Am I right? Yes. That's how to make money. That's how to make money. What is 700 naira on a 10,000 naira account? Is it not almost 10%? You have made almost 10%. Just one trade. Many time frames, many trades to take. Even this one, I said that this market is. Another chart you open that the market will be moving. Yes. Why this one is not moving? There are people that they are stronger than, those ones will be moving. There are people that are stronger than them, they will be pushing them. But these two have equal strength. That's why today they are in a trading range. Do you understand what I just said? There is opportunities a lot everywhere. Capitalize on moves. Don't capitalize on contract size. Don't put 5K on one trade. The market will move. If it doesn't move today, it will move tomorrow. And then patience, that's all. What I'm teaching you is patience. That is the only thing that you need to know. Patience. If you have patience, you will make money. But if you think, see, some of you work jobs that give you salary. So why do you want to take your salary in one trade? Okay. If you are not sure with your salary, yeah, that's why a lot of people prefer to work with fund managers, somebody who looks over your shoulder while you are trading, so that you follow your rules. Trading, nobody is looking at you. Nobody is watching you to know whether you are implementing your trading plans correctly. Look at you are in your bedroom taking this trade by that time, right? Nobody is going to tell you use 200. Okay, so I'm just showing you directly on the chart. Now the market is not moving today, but let's place a trade. Let's place a trade. There's a clean Marubuzu on the 15 minutes time frame, and this Marubuzu is late for us to go in, but this is a breakout. This is a breakout, but the breakout has already started giving people money. Right? It has started giving people money. See where they entered from. Close to the red line. See where they entered from. Watch the indecision candle that left a strong V. Right? Indecision candle here. Then there's another red candle that is black. Then the next candle is a Marubuzu. There's a tiny wick on top of it though. Can you see it?
No.
Okay. See what I'm saying now? This market is buying. If you come in here, you are at a mathematical disadvantage because your stop loss will be too far away. The stop loss will be too far away. The market might still go up to reach the target, but your stop loss is going to be far away. Okay, so what I'm saying here is market was around this area. There is a big crack. Let me show you the crack. And trend line, right? The trend line came from here. Group. Right? You see. Now there are two things you can do. You can wait for this market to do a retest. But you know why this market is moving? London has opened 130, I mean 134 now. So I mean New York rather. New York has opened. So that's why you see there's now false. So that's what happened. Now what I'm saying here is Now, if you are going to trade this, okay, well, and you're not supposed to trade this just yet, right? From what we know from the MTR, you're supposed to wait for it to come back. It happens. There are lots of those ones. This one is not that particular one. But it's supposed to come back and then reset. But if I am on my trading desk and I'm seeing this, I will go to 5 minutes time frame and trade this without out. Because you find the retest on a smaller time frame. You see it here. See it here. See that way.
They are seeking for indicators.
See that way.
Like to see the indicators of what you
Market
said.
broke and
To
then
see the indicators.
came back down.
Yeah. Like what he's talking about, the charts.
Right. So you can measure here.
Is this thing
here,
now?
And then take the profit there.
It's
Euro
USD. It's
we are on the
20
15 minutes.
moving
And of course,
average.
you're doing 15 minutes. You don't expect.
Right.
15 minutes is not for intraday.
20
money intraday. You have to use 5
average.
minutes. Okay, so
Yeah,
what I'm saying here is there was a downtrend.
I saw the question.
Okay, there's a downtrend. You can see. Market is a downtrend. And then this thing broke.
Yes.
On the 5 minutes, it's very obvious that, in fact, there is a failure here. Market is unable to go down anymore. Attempts to go down fails. So I say you will learn a lot of other things.
Sorry, I don't understand.
Right? Attempts to go down have failed several times. And what happens? The market breaks.
You guys stop talking now.
Moment market breaks,
actually talking about?
it starts to go up.
Now. Like,
It can go up like this for many bars.
Going through like this
Bars.
stuff, showing them like this.
If you're on this trade, this is a Marubuzu here, guys. See your indecision, guys. This one tries to go down fails, and then this one is printing. Right? So from here to here, you put your stop. How do you put your stop? Take the horizontal line. Right? See what I'm doing? Horizontal line. You click on plus. Plus if you want to add something to the chart. Click on plus. Horizontal line is here. Why I'm using horizontal line is to know the price.
What they want is
So you put the horizontal line right here so that you can see the price. Right? Now you take another horizontal line. Just click on this. Then you take plus, another horizontal line, put it right here. Right? Above this green handle. Right? Now your target is going to be where? 2 times. Of course, you're going to look at this is 16696. This is 16741. So you now say, of course, 74 minus 69, Abi, which is about 8. No, that's 5. Abi, that's 5. Okay, so that's 5, right? Now 5 here means we're going to take 2 times the 5, Abi. Yeah, the target will be 2 times. 2 times this will be, we're going to 1684, Abi. You get? You get what I'm saying now? So this is 1684. So it means that if you are taking this trade here, by now you'd have taken profit. Those that don't see this black you're seeing here is printed because some people use this one here. See, there's a Marubuzu here after this black. Can you see that? See Marubuzu after the black. You see. So immediately this thing gives us 1:2, somewhere around here. This gave 1:2, somewhere around here. Right? You can see profit taking. You can see profit taking that week. Can you see? Those that use this Marubuzu, if you measure here to here, from here to here, you can use these boxes you are seeing inside. Those are called grids. And use the grids now. So if you measure it, you see that what you have up here is 2 times what you have here. Okay, approximately it is what I'm talking about now is I have almost 1.5 grid for these two, Abi. I have almost 1.5 grid. Those small boxes, I have one complete one and almost half. Now, my 1:2 is going to be 3 boxes. Is it not? So from the height of this Marubuzu, you can count 1, 2, 3 boxes. Mainly got to that 3 box area, the market reversed. So people took profit there. That's the way this thing is designed. Right? People took profit. And then some people that allow their trade to continue. Do you see that retest I was talking about? See what I said? I said over here, right? This is Marubuzu. When you have this Marubuzu here, it's going to change because I've changed the zoom. So it's still almost around 1.5. Now what I'm saying here is from where you have this Marubuzu here, you know what Marubuzu is? Shaved bars. They are Marubuzu. Now from where you have this Marubuzu here, traders entered with the following bar. This is the entry bar that took them off. Now the measurement of this Marubuzu is almost 1.5, right? Almost 1.5 of the grid. Grid are all these small boxes, right? All those small boxes are grid. Now what I said is, just for your visual aid, to know where your target is, you can count the boxes to measure your target. So what I now did, I said, if I have 1.5, it means that my target will be 3. 1.5 plus 1.5, 3, Abi? And I'm showing you what the market does. Immediately the market goes to 3. This is 1, 2, 3. Immediately it goes to 3. Remember, I'm taking an approach, right? You can see it reversed. You understand what I'm saying? It reversed. Okay, and again, I was trying to point out to you that around here, look at 1:1. At 1:1, some people look at 1:1. Around 1:1 or 1:1.5, the market came back and tested the entry of the Marubuzu. This is what happens to traders that move their stop early. If you are risking 200, leave it here. Leave your stop here at these days. Leave it there. If you cannot say, okay, because the market is now moving up, you now push your stop up. I showed you this thing before, that test. You saw it. Saw the week. That previous one. You saw the market will surely come back and test entries. Significant entries. What is happening now? Right in front of you is taking off. The market wants to take off. I said, that's the way this thing is wired. Nobody going to teach you this thing anyway. A lot of people don't know what they are doing in this market. When the market takes a significant entry, it will come back and kiss that point before it takes off. That's the thing I was talking about here. It will come back and kiss it. It's called retest. It touches it and then goes. It will never come back again. If you are adjusting your stop, you keep moving your stop till your account is blown out. All right. So this is just one out of a lot of things that I believe that you can learn from what we're doing. Okay. So, but let's continue. Now, I want us to take a trade, but this market is not allowing us. It's obvious. See, this market is still flying. You can see where it is now. It's still going on. That's money. That's money. There's a lot of money to be made in this market if you know what you're doing. All you just need is patience. Be taking it small, and be growing the account. Before the end of the month, you will want to keep that account. It's not possible. People will not be here today. But then giving people profit, return on investment for many months. You know, go online, you see a lot of people. They will tell you that there is a way that you can trade and you never lose. It's not true. You have to accept that losses are there. But that this is possible. Making money is possible. One winning trade can outweigh all the loss that you have made. One. Okay. So now this is another issue. You are tempted to see that the market is moving and then you buy. Remember what I told you? You have a mathematical disadvantage at this point because your risks will now be wide. You don't just come here and put a stop loss here in the middle. It's wrong. This is called a technical stop loss. This is where the bank is putting their money to the bank. the market comes back and they will push it up. That's what happens with this week I was talking about. Market comes back and they will push it up. Your $100 cannot push any stop loss around this area. So you must use technical stop loss. I call it tipping point. The area of invalidation. If the market exceeds that place, you know that the big banks are not ready for this. Was that not what I told you? Because somebody said, can we give them something? I don't know. If they are serious, they will defend it. It's a great attempt to know that, okay, this thing is an important move. When you see it moves like this, as the market is going up, I'm closing my profit to. They keep buying more as it's going. No. If you want to buy more, wait for it to fall. When it falls, it gives you discount to buy. As it's going up now, professionals are taking their money. A lot of people took money. See the previous bar, 2 bars before. You see money taking. What causes reversal is profit taking by professionals. If the profit taking is too much, the market will reverse. People took profit here, around here. You saw it that time, it was stalling, wasn't moving much. People were taking profit. As I'm talking to you now, the market is moving. See strong bars. Some people were taking profit, some people were completely sell. They were reversing this market. Do you agree with me? What are you selling a market that is strongly going up for? Before you counter the market, the market needs to show you something that says, you know, I'm not going down anymore. I've broken the trend line. These people have lost their defense. Then you can take the trade. If you miss the first entry, there's another entry here. You know, so yeah, of course. Let's place a trade. Let's use a higher time frame. Okay, because if we stay here, you keep seeing the market moving, and then you see that there's no opportunity for us. So let's use a penny order. Okay, so I want everybody to open a different chart. So I'm sure you can now see things now on the chart when you look at it. So let's look at the chart. Look for moving averages, and then look for moving averages. Look for Marubuzu around important area.
Try. Are you
any chart?
Okay, please.
So I want you to open a different chart. So just go back one step, or just click on the first one here. The first one, you see the list of all the charts. So you can open any one. Let's look for an opportunity, and then I'm sure we'll come up with several opportunities. So we will place trades on them. Okay, have you seen anything? Change the time frame. Whatever we do today, I want us to see the results tomorrow because we have to place a trade now. So, but I don't want us to just place a rubbish trade. Let it be a valid trade. So look at the chart. And here, see one here now. What time frame is this? 15 minutes GBP USD. Is buy. Market has already gone. Or is it valid buy? Market has gone. Change it to 1 hour. 30 minutes. That is foul. It's hanging on the head. Take profit. You understand what I'm trying to say? Because you are the only one that is doing it, and you're doing it on a time frame that doesn't have the setup. Is still around the area. Let's do GBP USD 15 minutes. The only thing is that the market is above the entry point. So what we are going to take from this market is 1.5 or thereabout, right? GBP USD. GBP USD. Yeah, and then we'll also use the opportunity to know how to do that calculator. Yes. Okay. Minutes. 15 minutes GBP USD. You have seen it, Abi? And so you saw the Marubuzu that is there before the red candle, and then the new one that is forming now that is trying to send the market up. So put your horizontal lines to get the prices so that we can know how many pips those from where go slightly above where the market is right now. Because if you don't, the calculation will not be correct. And then even if you put a pending order, the market will tell you you cannot take it because the price has exceeded it. And then mind you, we are doing this because I just want us to take a trade. Okay, because the market is already moving. And now sometimes what you can do usually is you can set alarms. When you know that there is a significant point where you are expecting the market to come and react. No, this is, we call them areas of what? These are areas that you are interested in, right? So if there is a line, market touches that line once, twice, you can put an alarm that reminds you, that tells you, okay, the market is coming there. So when the market comes there, you start to watch it, see how the candles form. Marubuzu, Doji, all those things, you watch them. When they form correctly, you enter. Okay, if not, you miss a lot of opportunities. The lowest usually the Marubuzu. The Marubuzu is usually the lowest. So sometimes it's not. If it's not, then that's a job.
I don't understand.
It's the lowest. Yeah. Yeah. Okay. That GBP USD has a big crack on 5 minutes. GBP USD has a reversal in the 5 minutes. In the 15 minutes, Jerry. Can't use this chart. With no respect. We're supposed to wait to see how that candle closes, but we don't have that time. So let's just assume and buy. Then when you get home, okay, so we're all going to, I'm going to drop the link for another group where we'll all stay together, right? Then we follow up from there because we have to be paid for certain time per day here. So we can continue this part now after now. So if you have questions, drop it there. I will give it to you throughout today. The market will be open tomorrow. So as you have challenges, drop it there. Okay, but let's execute now. Execute now. Okay. Let's use. Yes. Don't worry, I'll do it. If you are not in Telegram, join there before you do. The link is. Go to 15 minutes. You see this. You see this. Even on like
Excuse me.
Can you see? Yes. It doesn't mean that very reversal. We can't be asked to close. Do you say the Marubuzu on the 5 minutes for reversal? In 5 minutes. There's Marubuzu.
Yeah, there's another one.
There's Marubuzu on major trend reversal for 5 minutes. On that same chart, is going what? There is this thing clearly on GBP USD. Yes, if you take that Marubuzu candle, you will get a 1:2 now. Okay, but it's 5 minutes, it's fast. We can't do it here. Because you have to check how many tips that candle is and then place your order. And I'm not sure you how to place an order. So let's use I'm not sure if 15 minutes to take target. If the market is not selling, 15 minutes might not take target.
Sorry, excuse me.
Why you have
In the 15 minutes, you tell to buy yourself.
and no, see what we realized. We realized that 15 minutes has something that is saying buy. That green candle, but look at that green candle. See, let me explain something to you. If you have a green candle and a red candle, if you have a green candle and a red candle beside each other, it's a doji. Do you know that? It's a doji. If I have, if this candle is red and the next candle is green, like this, red stops here, and then green now goes like this. Do you know what this candle means? This candle means that it is equal to weak that stops here and goes like this. Do you get? No. You don't understand. When you combine these two together, this is what you get. When you combine these two, you get this. This is the green part. Then this one took out this one, made it a weak. If you go to a higher time frame, that's what you see. If you have these 2 or 5 minutes, you open 10 minutes chart, you get this. To replace these two. Very understandable. Okay, so there are some differences on this time frame. Now, understand that if a setup is printing a particular thing on a particular time frame, traders who are watching it are the ones that will execute it. The computer is programmed to execute it on that time frame. Take profit also on that time frame. If 15 minutes is printing to do a certain thing, it's going to happen on 15 minutes, not on 5 minutes. If you're taking profit, take profit based on 15 minutes, not based on 5 minutes. I don't know if it makes sense to you. If you look at 30 minutes, you still see another thing. Those on 5 minutes can take profit, but those on 30 minutes doesn't go to the 1:2 for them. Doesn't mean that you are that setup is correctly printed on. If you look at the 5 minutes now, reversal is correctly printed. Look at 5 minutes GBP USD. Reversal is correctly printed. Marubuzi is there. Indecision is there. So we sell it. Right? We sell it. Goes up all the way to 1:2, and then we take that part. Okay? So what we'll just do is, just for the sake of curiosity and teaching, we are going to trade that Marubuzu that is there. Right? We're going to trade that Marubuzu. There's also an entry bar now after the Marubuzu. And then remember what I told you, at every point in time, the market makes you feel like you should buy and you should sell. Is it not? I told you, look at 15 minutes telling you to buy, look at 5 minutes telling you to sell. So what do you do? That's the best thing to do. You can never outsmart the market. As we're looking at it now, our trading plan. So if that is the case, let us follow it. Okay, so let's take a pending order below the candle there, and then put the stop right above there, and then put 2% on that number of pips in your calculator, so that you know how much to. We bought it here that says new order, 5 minutes. Press the button that says new order, the one at the S string. New order. Then now you have to, when you're giving the market a pending order, you have to take note of the stop loss and the target. So you write it out. So you write it somewhere on your paper, then you go there. But before entering the information, you put the lot size that the calculator gives you up there first. Okay. All right, just have you taken the prices? Take the prices first. The first thing you need to do actually is to take the pips, number of stop loss, the length of that pip. Okay, the market is almost getting the target. This one I'm telling you. Oh yeah, how many pips is your stop loss? Yeah, let's use 15 minutes. The problem I have with 15 minutes is that the deep crack we are seeing is on 5 minutes, it's not on 15. Do you understand what I'm saying? The setup has a swing high, swing low, swing high. It's clean on 5 minutes. But on the 15 minutes, it looks as if it's just one impulse going up. Still on the 5 minutes. All right, so what I expect you to do is very simple. From that area, Okay, remember what we are trading is, we said that let's keep a line here. Kept a line here. The line has cracked. The people going up don't have power to go up. That's the setup. They don't have power. There's a mixture of black and white. Okay. So now what we now say is, okay, let's take, you take the horizontal line, place 1 here. Market has exceeded our entry, but we are going to place it though. Okay, so we place 1 here with the horizontal line. And we place another horizontal line again. Another one at the top here, where the Marubuzu candle swing high. Yeah, you should see that. Let's mark it. So this is the this is the first one. This one now is for the entry. The entry is supposed to be here, but the market has started going to my target. Right? Can you see? The entry is supposed to be here. Near the Marubuzu there. Are you seeing it? Are you seeing it at all? Can't see. M5 or M? This is M5. 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 I see why I use M5 is the setup is printed correctly on M5. See, you have when the setup is printed correctly, other traders will take that trade also and force the price to reach the target. You see the setup here. Setup is very simple here. Look at the trend line. Can't see the trend line. That's the trend line. It's broken. Right? And market reverses gives us doji, gives us reversal candle. Okay, and then what I'm trading here is the Marubuzu here. This one. This is Marubuzu. Can see it. Can you see it now? That's where I'm supposed to enter from. Those who use 5 minutes are actively sitting on their computer. And I don't need to draw these lines. I will drag my mouse to see the number of stop loss and then quickly calculate it.
Yeah, time is up already. I said time is up already.
Okay, time is over. Last 3. Stop loss was what? 1.29818. Then the target was what? 29838. No, 478. Looks better than the other one. Right? Target. So you see place there, you just press place. Order has been opened. Right? So with this now, you go back to the chart, you find all those lines have been printed there. So if the market comes down again to that place, it will trigger it. Remember that we're just trying to show you how to trade, right? So because you can see your target is smaller than your loss. Do you get what I'm saying now? The target is supposed to be up here, but now see where it is because we didn't enter on time. So now if you're making money, you're going to make roughly 1%, which is like half of the actual thing that is happening here. And then this is wrong. This is wrong. Okay, but I've just showed you how to place the trade. Do you understand what I just said? I just showed you how to place a trade. So, but in doing it, you have to enter at the right time. If I'm the one that saw that Marubuzu, that time I told you there's a Marubuzu on 5 minutes, by now I would have been on this trade. because I already know how to place a trade. Okay, so I'm showing you, and we delayed because we're learning it for the first time. For those of us who don't know. Okay, so let's close now. Okay, so that they don't come and then let's close now. Oh, you can, yeah, you can ask the questions later, but let's close so that we can leave. Can ask questions later, and then you can supply any problem you have on the group. Okay, so I'm going to give you a link to join the group. All right, that group is going to be specifically for you guys. Okay, so that we can start on the same slate, so that one person doesn't come and then is, you know, too fast than the others. All right, is that okay? You can't learn everything in one day. Can't learn everything in one day. So don't criticize yourself if it's not flowing. This is the least thing to learn: how to place a trade, or how to enter a trade, or how to calculate your risk. It's not difficult. Yes, I have a PDF. I have a PDF step-by-step guide on how to do this placing a trade. So I can send it to the group. Step by step on how to place a trade, how to use the calculator step by step. I have all those things. So I'll give it to you on the group also. Is that okay? And no, I believe everybody here is on that group now. Just few persons that met me that they are not there. Not Instagram. There's no group on Instagram. Telegram, yes. Telegram. Yes. Okay, so let's close, please. Let's close. Let somebody pray for us so that we go.